Sunday, the IATF also expanded the flight ban to 7 more countries until December 15. Added to the red list are Austria, the Czech Republic, Hungary, the Netherlands, Switzerland, Belgium, and Italy. These are in addition to African nations initially included in the list, like South Africa where the variant was first detected.
Tanging mga Pilipinong pabalik ng Pilipinas via government-initiated or non-government-initiated repatriation at bayanihan flights ang pinapayagang makapasok.
Passengers who are already in transit and will arrive before November 30 are exempt. However, they will be required to undergo a 14-day facility-based quarantine. Nograles also explained why Hong Kong was put on the yellow list despite having one recorded case of the Omicron variant.
Pagre-red list ng mga countries will be dependent kung meron na pong local case doon sa bansa na yon.
Countries around the world have raced to shut their borders to South African nations within a few days of the discovery of Omicron. But a South African doctor who was one of the first to flag the new variant says the global response has been irrational.
So far, we've only seen breakthrough infections, not severe infections.
The Omicron variant has now been detected in at least 15 countries, mostly in Europe. Mobile journalist Pamela Vasquez, We Are One News.
Meanwhile, Moody's Analytics chief economist for Asia Pacific, Stephen Cochrane, says the new variant could potentially cause another surge of infections. He adds countries cannot let their guard down and must learn from the past, saying adequate public health facilities would alleviate the pressure on the healthcare system. Now, the Bangko Sentral says inflation for this month is likely to come in within target, citing a tempered rise in consumer prices due to a stronger peso and oil price reductions. BSP Governor Ben Diokno said consumer prices would probably increase by 3.3% to 4.1%. This estimate is much lower than the 4.6% inflation print last month and possibly within the BSP's 2 to 4% target. Now, during the last monetary board meeting, the Bangko Sentral revised its average inflation forecast for the year to 4.3% from 4.4%. Diokno said price rollbacks and a stronger peso during the month might have slowed price increases. The Philippine Statistics Authority will report on November inflation data on December 7th. Markets are closed today in observance of Andres Bonifacio Day, at least here in the Philippines, but no rest for investors and market makers for sure, with no shortage of action offshore. And you can see on my terminal here the cases of COVID, nevertheless, still quite contained when it comes to the Philippines. And if we take a quick peek at how the world is going when it comes to trade, take a look at that. The futures are in the green, and U.S. shares had already rebounded yesterday after that major slide that we saw on Friday. So finally, some recovery playing out. There is, of course, the S&P 500 wiping out all of the November losses yesterday, and technology shares from the Nasdaq 100 more than recouped even Friday's rout. So the futures are looking well. Even in Europe, it's looking quite positive. You have Federal Reserve Chair Jerome Powell over the U.S., however, saying that the Omicron poses risks to both sides of the central bank's mandate there for the stable prices. So inflation might become a worry and employment might become a worry. But President Joe Biden of the U.S. has cautioned Americans against panicking over the new variant. He said that the lockdowns won't be necessary in the U.S., so that's providing some optimism over there. And they said that pharmaceuticals are, of course, working on adapting the vaccines that are existing. Biden said instead of panicking, just get vaccinated or obtain booster shots. I also saw Dr. Albert Bourla, Pfizer CEO and chairman, on Bloomberg TV earlier this morning with David Ingles and Yvonne Mann. They said that they have prepared for this eventuality. They have specifically made research on the vaccines for this type of event, and they are ready to tackle this on. Now, let's take a look at the Asia shares and how they are opening this morning. A little bit of a mixed picture here, but nevertheless recovering from yesterday's slump. You can see in particular Japan, Nikkei 225 up by 1 2/10%. Over in Singapore, the FTSE Straits Times also enjoying a bit of a bump up, although this is, of course, far from how heavily battered it was. And of course, our index is close today, but we were the worst performing in Asia yesterday. Another thing to be watching out for China, the PMI and some other economic data came out this morning, and that was stronger than estimated in the month of November. It showed another month of expansion, better than expected expansion in China. And I want to show just quickly the Bloomberg Airline Index that is positive this morning. This is the World Airline Index, and it shows a lot on how the view on travel is going. That's up by 0.5% this morning, but nevertheless, if you take a look at the past 3 days, it's been down by 7.2%. Another thing to be watching out for: crude oil and how that's going. A bit of a spike up. Recall that it had slumped quite dramatically amid all of these concerns on Omicron. Of course, reducing the need for transport and oil and the consumerism, and therefore it had such a slump. It's now pushing back above 70 a dollar. And I just wanted to report a couple of issues here when it comes to the money index and of course our loans out. You've got October money supply up by 8.2% year on year. So that's expansion, but still that expansion was a slower rate compared to the previous month, which was 8.3% expansion. And finally, the bank net loans. So how much people are actually borrowing was up by 3.5% in October. And that pace of growth quickened compared to this 2.7% growth that we had seen in September. You've got the loans for productive activities growing 4.9%, and the loans for household consumption still falling. That is down 7.2% year on year, but still less than the fall of 7.8% that we saw in the previous month. Let's check in on the biggest headlines we are keeping our eyes on. The National Privacy Commission has launched a probe into whether telco companies and payment platforms exercise due diligence in transacting with data aggregators. That is amid the proliferation of text messages offering fake jobs and investment schemes. The Philippine Star reports that an interagency group has also been created to fight smishing and text spams. Now, in a statement, the NPC said it ordered Globe, Smart, and Dito Telecom to submit information on their data flows and transactions involving data aggregators within 5 days. The NPC also sent a similar order to Union Bank and Globe Fintech Innovations, which operates GCash. That's because these are the main payment channels where victims are being directed in text messages to deposit their investments. The NPC said the telcos trace smishing and text spams to China and India web-hosted companies. Globe has also identified data broker Macro Kiosk, which was tapped by China Skyline Telecom, as the primary source of job hiring texts containing a WhatsApp link. And within 10 days, the telco player found 1.55 million such messages were sent through their network. Now, duties and taxes collected from marked fuel products had exceeded 324 billion pesos as of November 25th. Now, since the program's launch in September 2019, the volume of levied fuel had hit close to 33 billion liters based on data from the Finance Department. Now, revenues include 295 billion pesos in customs duties and almost 30 billion pesos in excise taxes. The fuel marking program seeks to deter fuel smuggling by injecting a special dye into products that have undergone tax compliance. The focus is now on whether the government will be preventive and impose lockdown restrictions in anticipation of the Omicron variant coming to our shores, or will they maximize the holidays to buoy our ailing economy? Here to weigh in, we have with us AJ Montesa, economic analyst, Action for Economic Reforms. Good morning, AJ, and welcome to Businessworld Live.
Hi, good morning, Danie. Well, thanks for having me.
AJ, $1,000,000 question about what should the government do. We've seen this before. This isn't the first time we've seen a wave. It's imminent, it appears. Lockdown versus keep the economy going.
Okay, I think it's right now, I think it's too early to tell. It was just a few days ago when the WHO designated the Omicron variant as a variant of concern. So right now, they're still studying the transmissibility, they're still studying the severity. So right now, I don't think we should panic just yet. But at the same time, better to be careful than to be complacent. So I think what the government is doing now, they're preemptively putting back up our travel restrictions, which is a good move because as of right now, the Omicron variant has not yet reached the Philippines. It's more likely going to come from, for example, African countries or European and even North American countries. So as long as we are careful at the border, we will be able to catch it before it spreads further here in the country. But in terms of policy, I think it's good to continue to be cautious. We don't need to lock down right now, so we don't have to panic. But it's good for the government to pursue strategies. For example, the Health Professional Alliance Against COVID, or HPAC, has some recommendations. For example, they should prioritize air circulation, make sure that as more people go out into the malls, into restaurants, we have good ventilation, good circulation. We need to maintain physical distancing. We need to continue the use of face masks, and of course, minimize the interaction if we can.
AJ, I actually had Dr. Guido David in one of my panels, and what he was saying was that the surges that we were seeing were not because people weren't wearing masks, were not really because of local transmission, but really because of the variants coming in. And he even highlighted that in 2020, the Christmas rush didn't really cause the surge. It was before and after the Christmas rush, so it wasn't because of that. Tell us with this data, and of course with the vaccination story getting better than in Delta, do you believe that there is room for us to still live with the virus to support the economy?
Right. So I'm not a medical expert, so I can't speak to that aspect. The WHO is doing their studies on that. But I agree. I think maybe the worst case scenario would be what we saw this past year in the Delta. It was worse than the first wave of the virus. So if we're just projecting the impact on the economy, I think we're not going to reach, for example, 9% unemployment, which was the worst when it came to Delta. As of right now, we're not yet in the state that we can say that Omicron is worse than Delta. So we can brace ourselves, we can prepare ourselves to be ready for that. We can continue to get vaccinated so that at the very least we have some cover. It won't be as severe or as transmissible. So I think that's the step that the government is taking. And our vaccination rates are increasing, so that's a positive sign. So right now, I wouldn't yet recommend doing lockdowns. Nobody wants to do lockdowns, especially businesses. Even now in the holiday season, our economy is very consumer driven. So this is the opportunity for us to bolster our economy, to boost employment. So if we pursue lockdowns too preemptively, it might be foregoing some income and employment, even though it might not be needed right now.
What about the government? Have they prepared for this eventuality when it comes to the funding? Have they raised enough money to be able to plug maybe fiscal deficits, or are we able to even borrow more? Should we be needing more funding for a health response?
All right. So when it comes to the government getting funding, right? So we did foresee that when the pandemic struck, that this would be maybe 3 to 4 year path to recovery. So we don't foresee yet that the government will be able to plug in the fiscal gaps that we had for the past year or even this year. But that doesn't mean that the government should stop its spending. It can borrow, for example, it can take advantage of loans from multilateral institutions, and it can use that to minimize the economic impact, to minimize the poverty impact that the pandemic will have in the long term. So I think our budget, our fiscal spending should reflect that. We should still spend enough on vaccines. We should still spend enough on the infrastructure that we need to protect our economy, especially to allow people to travel safely, to make sure that workers have enough, for example, telecommunications infrastructure to have hybrid work from home setups. So those are things that the government can invest in so that even moving forward, living with the pandemic, we can be more resilient.
Have you seen that fiscal reforms have brought clear, revenues? And if so, where? Where have we been able to get more funding for like you mentioned, a long-term plan to battle this? This is it. We can't just raise money right away for every single wave that comes, but we need to be having better reforms fiscally for them to have a long-term response.
All right. So even before the pandemic, we were already pursuing some fiscal reforms. For example, the train was able to increase revenue, as mentioned earlier. The fuel excise taxes were able to increase our revenue. The corporate income tax reduction might decrease our revenue, but it should be offset by the fiscal stimulus that it provides. So I think currently, last month, right, there was a spike in fuel prices, and people were talking about lowering it. In fact, I think right now it might be wise to consider, in fact, even raising taxes, and maybe in fuel, maybe in cigarette and alcohol products. These are commodities that we can raise taxes, that we can use to fund, for example, our health expenditure and our pandemic response. So I think these areas are things that we can look at, that we can consider. We don't have to be reactionary in terms of looking at the very short-term trends, but we need to look at the long-term trends and where it's going so that we can be more resilient and responsive to the pandemic.
How worried are you about the oil prices? You mentioned the tax on oil and the impact on inflation at this specific moment.
Yeah, so even last month, I wasn't very worried. I identified it as a very transitory spike. And even now, we're seeing that prices are going down. OPEC countries are starting to adjust. So my prognosis is that the high prices wouldn't have lasted long. And that's what we're seeing now. We're seeing rollbacks so that our inflation is going to be within target. I don't think it's going to breach the BSP's target of upper limit of 4.1%. So it's probably going to be within range. So I don't think it's going to be a cause for concern in the long run, even as OPEC will continue to expand its production into the coming year as well.
Okay, and finally, what's your outlook on consumption? And that story, regardless of the Omicron variant, but just in general, and how we've actually bounced back. We did, report in terms of the loan growth, not necessarily, it's still contracting, the money growth. And when it comes to consumption, despite the fact that we've reopened our economy since, at least mid-September.
Right. So our economy is really consumer driven, consumer spending heavy. What we've seen is that our economy was pushed back to where it was maybe 3 years ago. So again, it will take a 3 to 4 year trajectory towards recovery. But what we're seeing now is, as we've lifted lockdowns, we're seeing more people going to malls, we're seeing more people going to restaurants, we're seeing more businesses being able to feed and provide for the consumers, and we're seeing higher demand, especially now in the holiday season. The fourth quarter is really the opportunity for the economy to rebound. So I think we have a positive trajectory as of right now. So I think there will be there's a good chance that we're on the path to recovery. It's too early to tell for Omicron. I don't think we should panic right now, but it's always good to be careful so that we won't have to resort to lockdowns. Again, if we continue to wear masks, if we continue to encourage people to exercise physical distancing, if we continue to boost our vaccination rates, it will help prevent the government from having to declare lockdowns. And those lockdowns are what we need to prevent so that we can continue to boost our consumer spending even in 2022 and moving forward.
Okay, so don't panic. We have other ways to manage this. And sayang naman if we go into a lockdown in the fourth quarter when our economy needs us the most. Thank you so much, AJ Montesa, Economic Analyst, Action for Economic Reforms.
Thanks, Danny, for
And that's a first look into the business day. Today is Tuesday, November 30, 2021. Catch Businessworld live at 3:15 p.m. today. I'm Danie Laurel. We are One News.